Congress is poised to pass a bill to keep AM radio in cars. But time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Register now at dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
It's Chuck, Paul, and Tucker with you, and the big news today is after the close of markets, Nvidia is going to be reporting their latest quarterly earnings, and with Nvidia today having a market cap of nearly $3.2 trillion, this is one that has the ability to not just move Nvidia stock, but to move markets as well. And so in what has otherwise been, quite honestly, one of the most boring weeks of the year.
Confirmed. Confirmed. Production confirmed.
Oh, boy. Look, from a pure investment perspective, it's been fine because things basically haven't moved.
Yep.
But in terms of just like comparing this week in markets to watching paint dry, I'd rather watch paint dry. I would.
Should do it from a Sherwin-Williams or something, you know? A little more interesting.
We'll see if we could do a remote tomorrow, maybe, and see if we can put that together.
Tomorrow we'll at least be able to talk about what happens tonight.
Because my goodness, it's just been a boring week. If you've been turning us off every 5 minutes, like, wow, there's nothing going on. I get it, but don't do that.
But not today.
But we are so back because Nvidia reports earnings after the bell today, and the expectations are high, Paul. Very, very high. What are we seeing here?
Sky high. So as Chuck was mentioning, Nvidia has a significant stake in whatever major index you want to look at, I guess excluding the Dow Jones, but 7% of the S&P 500 and 8% of the NASDAQ. That's the weighting that Nvidia holds. And what we're anticipating in terms of the numbers that are going to come out from Nvidia after the close is a quarterly revenue figure posting at about $29 billion. That's double what they did last year. Again, that's what the analysts are anticipating. I believe in their last quarter in Q1 they had done around 26 billion or so, but if you look at, like I mentioned 12 months ago, doubling revenue. So extremely high revenue growth from a profitability standpoint. I believe their last quarter came in around 18 billion. They've just been printing money, and really a lot of the focus on the numbers of what they'll report for this upcoming quarter that they're going to announce, it seems as if it's all indications that they did have a strong quarter, but there's going to be a lot of scrutiny, Chuck, similar to the Federal Reserve meetings as to the messaging that Nvidia comes out with for future quarters in terms of the revenue guidance that they're going to be trending over the course of the remainder of the year. Google and Amazon and Microsoft and many others who are in the Magnificent Seven have been spending a boatload of money to buy the chips and the data centers that NVIDIA is so critical to providing. Google, for example, had spent $13 billion in Q2. They were beaten up a little bit when those earnings came out relative to the $12 billion that analysts were expecting them to spend. And that pattern is across many of these other companies. They're spending a lot of money. The question is, will that continue? And that's really what's been propelling a lot of the stock market this year. If you strip out the earnings growth of NVIDIA, you really don't have a tremendous amount of earnings growth across the S&P 500. So that's really what's at stake when they report after the close of market today.
And I think ultimately, like, here's how I think you have to start to look at it when you get into these kinds of valuations. And when we talk about valuations normally, like we talk about like price to earnings and things like that. But I want to talk about just how much NVIDIA is valued at. It's valued at $3.2 trillion right now. And ultimately, it's a function of one thing. How many microprocessors can you sell to Apple, Google, Microsoft, Meta? Because those are the buyers. You can talk about, startups and all. Ultimately, startups don't go and buy 100,000 of these chips at 40,000 a pop. They just don't have the money to do so. And it's going to be a question of, hey, can you continue to grow your sales to those companies exponentially? Like, you can't just plateau at, I don't know, $40, $50 billion a quarter. Like, you can't double revenue from here and then stop. Because then you sit there and you say, okay, so we're selling 200 billion of these a year. We're making 40% on that, so we got 80 billion in profit. Okay, that's good, but what's the path to a $6 trillion valuation? What's the path to 10 if our profit is just kind of capped at a very, very good $80 billion a year? and so here's where I've kind of gone with this. If you want to play the string out over the next 5 to 7 years with Nvidia and anything else AI adjacent, is that if the buyers of Microsoft software are looking at AI just as something that can supplement human beings, I don't know how you get to the revenue numbers and the profit numbers that Nvidia needs to continue to grow. Because, look, as a company that has Microsoft as one of our vendors for, our operating systems and storage and this and that, you sit there and you say, look, how much do I really want to pay them in order to just do more stuff, in the cloud and all that? There's only so much budget I have there. The place where it starts to get really interesting and dystopian is if Nvidia and AI and all of that is not trying to enhance and replace software, but instead is trying to replace human beings. That's where you start to see the spend happen, where companies say, yeah, you know what? I normally pay someone in the accounting department $100,000 a year to be an accountant. Gee, I'm not going to do that anymore because I can pay Microsoft or Google or Meta or whoever $60,000 a year for a virtual AI accountant who, yeah, they can't do all the things a person can do, but they can do all the accounting things that a person can do. And that's where the incremental spend has to be in order for Microsoft to justify ramping its investment up another 10 billion, 20, 30, 40, because otherwise the revenue's not going to be there just getting people to pay an extra $20 a month on a license.
Right.
And you start getting into some scary stuff when you start talking about that.
No question. And it will be interesting to see what comes out of this quarter in terms of what NVIDIA is going to guide. It seems like what I'll be focusing on, not for today necessarily, but in future quarters, you really have to scrutinize the capital expenditures of those companies that we just mentioned. At the first sign that they are going to trim expenditures, meaning Google, Amazon, Microsoft, etc., that to me would seem to be a key indicator that they are less reliant on NVIDIA or perhaps paring down their purchases on that side of things.
So everyone's all excited about this, and this in turn leads us to the second piece from Bloomberg. It's titled NVIDIA's expected $310 billion move to drive broader returns. And if you read the headline, you're like, well, what'd you just say, Chuck? Like, you're not alone, because you're trying to figure out, okay, what does this mean? The basic premise of it is that if you look at the options market for any company, index, or basically anything that allows options to be traded on it, you can figure out a range of projected moves based on the implied volatility of that said option. And what we're seeing for NVIDIA options that have a trade date of tomorrow, since you now have 0 days to expiration options for all kinds of stuff out there, is that 65% of moves that will happen tomorrow will be somewhere within a plus or minus 10% range. So the vast majority of moves are going to be somewhere between plus or minus 10%. Well, what does this actually mean? If you look at implied volatility on most stocks, the projected move for, the next day is usually somewhere between plus or minus 1 or 2%. So options traders are expecting huge potential moves today. Rather, tomorrow, I guess, is what you would say. And with Nvidia trading at, again, $3.1, $3.2 trillion, depending on the minute that you're looking at it, hey, a 10% move could either result in $300 billion being added to the company or subtracted in a matter of hours, and that's something that is notable.
No question.
Your thoughts, Paul, on anything else there?
No, that I think that encapsulates it pretty well. There's certainly going to be a lot of volatility in one direction or another, and we're going to have to wait and see as to what that looks like until we get the post-market update after the close today.
Let's take a quick break. When we come back, we'll talk a little bit about the Fed and their projected path for rate cuts right after this.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so make sure you're prepared, or you could make costly mistakes that affect your overall plan. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit your family by calling 866-848-5699 right now. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud member of a military family, including my father Victor and my brother Timmy. Serving my country was one of the greatest achievements of my life, and it's why I choose to give back to this special community. My father built Veterans Development Corporation, and I am honored to continue his legacy of working to help many disabled veterans and their families. It also gives me great pleasure to once again be the presenting sponsor of this year's DAV 5K Boston. I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. Head to visitusvi.com and book your trip today. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
We were talking in the last segment about Nvidia, who is, again, kind of the poster child for everything that has been going on with AI and semiconductors over the last couple of years. Another company that was getting a lot of publicity earlier this year is a company called Super Microcomputer, which, again, dumb name, but whatever. Like, who cares when you're making money? But here's the question is, how much money are they making? I'm going to quote here from the Wall Street Journal. Shares of Super Microcomputer opened lower after the company delayed filing its annual report with the Securities and Exchange Commission, extending losses spurred by a short seller report the day before. Super Microcomputer is now down about 25% on the day. I'm going to quote here again. The server and computer products maker said before the market opened that it would not be able to file its Form 10-K for the fiscal year that ended June 30th without unreasonable effort or expense. Quote, additional time is needed for SMCI's management to complete its assessment of the design and operating effectiveness of its internal controls over financial reporting as of June 30th. They don't trust their accounting. And this is kind of a big deal for a couple of reasons. The first is Super Microcomputer has been another company that was just on an absolute rocket ship trajectory through kind of Q1 of this year before splatting is the technical term. Over the last 6 months or so. But the other thing about Super Microcomputer is they are a major buyer of Nvidia products, and that they typically, will handle a lot of server design and things like that, and basically put everything together for companies that need Nvidia products. If they are having accounting problems, it really is not a great sign as far as what it means for the overall health of that ecosystem, given how big of a role they play in it. So it doesn't mean anything is wrong with regards to Nvidia. I'm not implying that Nvidia has accounting problems, but I am saying when one of the major players in a space says, hey, we can't file our annual report because, quote, we have to complete our assessment of the design and operating effectiveness of our internal controls over financial reporting. That's not a good sign. It's a very bad sign, which is also why the stock is down 25% today.
Yeah, in 2020, Supermicro had a investigation resolved with the SEC where I believe they paid somewhere around $17 million to correct, or in regards to 2014 to 2017 fiscal years, they were correcting financial statements, and there was all sorts of issues in terms of its accounting and disclosure. So this isn't a new issue for Supermicro because this dates back a significant period of time, going back to 2020, and in specifically, they were looking at years 2014 through 2017. So certainly concerning, on top of that short seller report, which was done by Hindenburg Research, where they too really said that there were some glaring accounting red flags. So obviously more information needs to come out on this, but the accusations are pretty serious, and the stock price is reflecting at that at this point.
And there's some fire there. If Supermicro is saying, yeah, we need longer to prepare our reports because our internal controls aren't good, it's not just smoke. There's a problem there that they are telling you.
I always think of Heisenberg when I see Hindenburg Research as a side note.
Oh, interesting.
Yeah. Just letting you in.
Heisenberg the scientist or Heisenberg the Breaking Bad
yeah.
persona?
Yes.
Okay.
Breaking Bad persona.
Just confirming. Because the Heisenberg uncertainty principle is one of my favorite physics problems. We could get into a discussion of that if anyone wants to.
Gasp. I never took physics in high school.
I don't really want to, Chuck.
It's fine. It's just the idea that you can either know the position or the what is it? The position or the charge? No, not the charge of an electron. It's the position or the velocity of an electron, but not both.
Right.
I think it is.
Of course. Sure.
Don't worry about it. Listen, the reason that you can listen to us on the radio is because of the Heisenberg uncertainty principle. That's all you need to know. Let's talk about the Federal Reserve and rate cuts. Headline from the Wall Street Journal, Fed rate cuts are coming, but investors disagree on the path forward. Gee, not surprising given that the Fed also internally disagrees on the path forward. Your thoughts, Paul?
Everyone's going to have a differing opinion as to what the Federal Reserve should do. Mike and I were talking about it earlier this week, that they are like referees, where they are very easy to beat up and criticize their decision, with hindsight being 20/20 and all other factors being equal. What we have coming up here is an inflation rate, the core PCE, that's going to come out on Friday. That will be July's data. That is as we always say in the show, the Fed's preferred inflation measure. That is set to come in around 2.5%. You're at a point where rate cuts are on the table, 25, 0.25%, or 0.5%. That's really what's up for debate. Everyone can argue about it, Chuck, but ultimately it's going to be the data that comes out September 6th from the Labor Department and others that really dictate what this policy is going to look like, or this rate cut is going to look like. Otherwise, it's all just speculation, right, at this point?
Yeah, and look, I think that when, I find it kind of funny when you see some of these things that are published by different banks about this. Like, there's one bank that says, quote, "We now expect 25 basis point cuts at every meeting this year. However, there's a relatively low bar for a 50 basis point move." Well, okay, so why are you even trying to project every meeting at that point? Why not just, hey, here's, what's going to happen at the upcoming meeting, and we'll go from there, if you're saying there's a pretty easy way that we get to 50? I guess I just look at some of the stuff that comes out of investment banks and the sell-side research they do, and I kind of look at it, kind of like, okay, who are you really publishing this for? What are you really doing here? But that's just me, I guess. So, yeah, rate cuts, again, I think the biggest surprise would be if you do not get a rate cut in September and subsequent ones afterwards. The thing that we do need to figure out is what's the magnitude of them going to be, and then how long and deep do those rate cuts need to go on. But no one has any clue because, quite honestly, I don't think anyone has a great handle on exactly what's going on with this economy right now. It's at an inflection point, and it could diverge pretty sharply depending on how the next 6 to 8 weeks go, in my opinion. It's kind of where we stand. Sure. By the way, the Heisenberg uncertainty principle, I did look it up just to confirm.
Oh, good.
Good. Thank you.
Well, no, this is important, actually. It's mostly originally used for trying to figure out stuff about electrons, which, again, matter to radio, given that radio is light moving, across the air.
Yep.
But the overall idea is, hey, if you try to measure the location of an electron, you're not going to be able to measure its momentum as well. Likewise, if you try to measure the momentum, you can't measure where it is as well. You can have one but not the other. That's all it's saying.
This is like when Mark Van Day is like, everyone remembers that from their intro to physics course. Or
right.
He'll always say, everyone remembers that from their intro to macroeconomics course.
This is important. I was trying to explain to my 4-year-old that radio is light the other day, and I got a lot of glossy-eyed stares back at me, but it's fine.
There's going to be one smart kid.
We'll get there. It's little baby steps. It was my explanation that was really the problem. Quick break here. When we come back, it's Wall Street Watch, and then Todd Lutsky joins us for Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll
see you at practice this weekend. And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled A Day in the Life of a Retiree. Mike, one of the key focuses of this piece is about how to figure out how much income you actually need in retirement and where you start tapping assets from. How do you make those decisions?
Yeah, don't you hate the rules of thumb on this, right? Like, oh, I'm going to need 80% of what I had before. The answer is that there is no rule of thumb. There's no good one that you can use to figure out how much income you are going to need in retirement. Do you have a mortgage? What sort of travel are you planning to do? Yes, you won't be commuting as much. Maybe you and your spouse can go down to one car, but if all of a sudden your plan is to dramatically increase your travel budget, that changes everything.
And when you look at other things that can matter, it could be where's your family located? Are you planning on moving somewhere else? Do you have grandkids that you want to spoil? These are all things that are going to play into that discussion of how much money you need to retire on.
Yeah, no doubt. And so it really does start right there with assessing your retirement ability. It's what type of income am I going to need in order to just be happy. It's not necessarily about maintaining lifestyle. It might be a different lifestyle once you're retired, but will I be content with it? And what sort of activities and lifestyle am I looking for once I am done with that 9 to 5, once I'm done putting in the hours for working and saving for my future?
Our guide this month is titled A Day in the Life of a Retiree. The way to request it is by calling 800-393-4001. Again, it's titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mostly quiet ahead of the highly anticipated second quarter earnings report from Nvidia due out after today's close. Right now, the Dow is up by 14 points, S&P 500 down by 2 points, and the NASDAQ down by about 1/3%. Russell 2000 is off by 3 points. 10-year Treasury yield is flat at 3.82%, and crude oil off about 1.5%. trading at $74.37 a barrel. Abercrombie & Fitch handily beat second quarter earnings expectations as the longtime mall retailer saw gains in its Hollister brand and international markets. Revenue in the second quarter jumped 21%, which follows 16% growth the year-ago period. However, its CEO cautioned of an increasingly uncertain environment as macro conditions worsen. That stock is off by 15%. Meanwhile, shares in Foot Locker down by 12%. After the sneaker retailer saw its comparable sales grow for the first time in 6 quarters, the company did, however, keep its full-year guidance unchanged and announced store closures in Asia and Europe. Sticking with retail, where both Nordstrom and Kohl's lifted their respective annual guidance after posting solid quarterly results. Both of those stocks are up by about 5%. Elsewhere, shares in Supermicro Computer tanking by 24% now as investors continue to digest a report from a short seller yesterday that targeted the company's accounting practices. And aside from Nvidia after the close today, we'll also see second quarter results from Salesforce and CrowdStrike. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we're now joined by Todd Lutsky from the law firm of Cushing & Dolan. We call the segment Ask Todd because it's your chance to ask Todd your estate planning questions. Studio line is open at 888-205-2263. Last week, I know we left one person hanging, so if you happen to be listening, that one person, hey, call in early today just to make sure that you get your question answered. If you're not that person, call in early as well because, hey, early bird gets the call with Todd Lutsky. 888-205-2263. That number again is 888-205-2263. Mr. Lutsky, how are you today?
I am doing wonderful, and you?
I'm good. Did you see the news that Oasis is coming back with a reunion tour?
No, I haven't.
They are. I've been singing Wonderwall at work all day today.
Yeah?
Everyone asked me to stop.
Good.
I said maybe. In any case, Todd, I want to talk to you a little bit about irrevocable trusts, and specifically, let's say that you're someone who has one of these Medicaid irrevocable trusts.
Yeah.
Say that you put your home inside of it.
Yes.
5 years, 10 years, 20 years later, you say, hey, you know what? We want to move. Can that be facilitated with a home inside an irrevocable trust?
Quick answer is yes. And that's the good news. And now we'll talk a little bit about the details of what is involved in accomplishing that. And the good news, again, is that it's pretty much the same amount of paperwork, the same amount of effort, the same amount of taxation as would be the case if it wasn't in the trust. So let's begin. It's in the trust. Who's the trustee? Oh, it's a kid. So do I need the kid's permission to sell it? How do I tell the kid to sell it? Well, you just simply do that. You tell the child we're selling the property and they're the trustee. So they're going to sign the offer, the P&S, the deed work. They're going to do all the paperwork. Now, they're going to have no liability, but they are going to have all the paperwork to sign. Oh, but if the kid says, no, I always wanted to inherit that Cape property, so no, we're not selling. Well, you get to keep the power to remove and replace the trustee anytime you want. So you will begin by removing the trustee and then putting someone else on of your choosing, not yourself. And, of course, you will then have other bad things that will happen to that child. You'll inform them of that later. Okay, so now I'm selling it, but what about the taxation? Where's all the money go? Well, the money all goes into the trust because the trust sold it, so the trust gets the money. What about the capital gains tax? Well, these trusts are grantor trusts for income tax purposes, so that means you get to keep the taxable event is as if it's reported on your personal return. So important, what you're keeping is your capital gains exclusion on the sale of your primary residence. So if you're married and you have this joint irrevocable trust, the first $500,000 of capital gains is exempt. So that keeps your tax liability down, or it keeps it the same as it would be had you not sold it through the trust. And then, you didn't ask this, Chuck, but I'm going to give it as a bonus.
Sure.
You can then take the money and use it to buy another house so you can downsize and move to any state you want without restarting the clock for Medicaid eligibility. I mean, if you're listening, you pretty much are saying, can't I do all that stuff today? Yeah, pretty much. So a lot of flexibility built into these trusts, folks. Lots of flexibility.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you've got a question that you want to ask Todd about your estate plan, still have a little bit of room on the phone lines here at 888-205-2263. That number again is 888-205-2263. We are going to take a quick break right now, but when we come back, we're going to get right to your questions with Todd. So again, still a little bit of room on the phone lines at 888-205-2263. Quick break here, and then it's right to your questions with Todd. That number one more time is 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
When you stop working, you stop earning a paycheck, and if you don't have a good sense of what your plans are in retirement, you may be faced with some financial challenges. Hi, this is Chuck Zodda from the Armstrong Advisory Group. In order to retire comfortably without that financial strain, you can either reduce your expenses or find ways to replace your pre-retirement income so that you can determine the kind of retirement lifestyle you can afford. Our new guide this month is called A Day in the Life of a Retiree, and you can get it right now by calling 800-393-4001. In it, we'll walk you through several considerations you'll need to keep in mind as you develop your retirement plan. Get your copy of this brand new guide today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right, time to get right to your calls with Todd Lutsky. First up, we got Mark in Plymouth. Mark, you're on with Todd Lutsky.
Hi. Good morning, everybody.
Morning.
So, 20 years ago, I did a trust for our family. Everything has changed quite a bit.
Mm-hmm.
But we're considering moving to Florida and making that our legal residence because of the no estate taxes and no sale and no income taxes.
Yes.
Do I need to do a new trust and stuff down in Florida?
So the type of trust that you did 20 years ago, I'm assuming, was a revocable trust or irrevocable?
It was revocable.
Great. And you're going to and that's still an okay type of plan for you 20 years later?
I think so.
Okay.
Yeah.
So
well, I'm 70 years old now.
Okay.
Kids are grown up now.
Yeah.
So things have changed quite a bit.
So, I mean, my point is that as you've gotten older, you have enough assets. You're not worried about nursing home planning, so you're comfortable, and that's partly why you're moving, because there's an estate tax here. At $4 million or more, you can stay and we can pay no estate tax in Massachusetts. But if you're married, but if you have more than that, you're right. Moving makes sense. So I'm assuming that's where you're at, somewhere above that.
Yes.
And so if that's the case and you have a nice revocable trust, doesn't mean that 20 years ago that the documents are no good. They still are. They still will work for you. So that should be just fine. So you should be able to move, keep your trust, which is your heavy lifting document. You don't have to refund everything. You don't have to retitle your properties. You don't have to retitle your bank accounts, your brokerage accounts. I assume they're already titled in your revocable trust. So all that is great. What I would do, though, is if you're moving, check two things. One, when you get there, you do probably want to update your basic documents, the healthcare proxy, the power of attorney, the will, just to make them state specific. Not only because you should, but also it's going to help you show your intent to be a Florida resident. I mean, it's not as easy as you think. I did a seminar recently called So You Think You Changed Your Residency. You can imagine why I say that, right? So when you leave Massachusetts, do you plan on keeping real estate in Massachusetts?
Yes.
So any real estate you keep in Massachusetts must be owned in a LLC. If you don't own it in an LLC, even if you're successful and you've changed your residency, Massachusetts taxes non-residents on in-state real estate as a percentage of the whole. So if you've got $1 million property on the Cape and you're worth $5 million in total, then they will take $1 million as the numerator, $5 million as the denominator, come up with your 20%, and then take that percentage and multiply it by the tax on $5 million. So you still will be taxed en masse. But if you convert it to an intangible, which would be stock in an LLC, Massachusetts cannot tax intangibles on non-residents. So you need to at least get that set up in Mass. Otherwise, just change the basic documents. Make sure you spend 6 months and a day there among a laundry list of other things so Mass doesn't think that you haven't changed your residency. So hope that helps a little, folks, but there is a lot to think about when you're changing your residency. That's just a few of them. And quite frankly, there's a lot to think about when you're doing your estate plan. Like here, I asked, 20 years, the trust is still good, but I'm 20 years older. If my assets haven't kept up with me, maybe I do need nursing home planning, and I have a lot of people who switch from revocable to irrevocable 20 years later. If you're one of those people and you've never done an irrevocable Medicaid trust, get this month's guide. We're right near the end of the month, folks. It's going to go away. It's unlocking the power of Medicaid trusts in a question and answer format. It's going to help you understand the do's and don'ts for you while you're living, plus explains all the tax ramifications that go with it. I think you will find that you have way more control than you ever thought. But if you don't know if it's right for you, after you read this guide, you will know. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another one all queued up for you here. Let's go to John in Providence. John, what's your question for Todd Lutsky?
Hey, Todd, a question for you. I've got a daughter who just is a freshman in college. I'm a divorced man. I have a main house and a very, very small house, a main house in Rhode Island, a small house in Mass.
Okay.
I'm under the impression that if I did a trust now, which I've not done any, and by the way, I'm 65 and a half years old.
Okay.
That would affect her financial aid in a big way because, all of that equity from my houses would be taken into her financial aid. Is there a way for me to do a trust with like an intermediary, a sister or something like that, that would pass it on to my daughter after she graduated if something happened to me or something like that? Now,
I don't know if you're asking two questions, not. Are you saying, do you want a trust that you think is going to shelter for financial aid now, or if you die, shelter for financial aid?
Now, because I think it would change your financial aid picture in a big way.
I don't think so. I think if she's your daughter and you own those properties right now, they're affecting her financial aid exactly the same as they would be if you put them into any kind of a trust that I can think of. So I don't understand how that would make a difference. Right now, you own the property, so when you apply for financial aid, which I'm no expert on for sure, I think they ask you for all your assets, right?
Yeah,
So-
but they do ask there, is your dependent a beneficiary of any trust? And I think they look at that type of asset differently. They take a different percentage, I believe.
No, if she's a beneficiary of the trust, then they're going to say that's hers as well, I think. So you can have it set up so that they don't own it when you die. Perhaps there might be a way of doing it, but again, I'm just not an expert on the Medicaid. I mean, I'm not an expert on the financial side of things for these things. So my feeling is I don't have a trust answer for you on that one. So I hope it helps a little.
Todd, we've got another call here for you. Let's go to Diane in Worcester. Diane, you're on with Todd. What's your question?
Hi, Todd.
Hello.
Thank you for thank you for taking my call. I'm 74 years old, and 11 years ago, my husband and I did an irrevocable trust.
Okay.
My husband passed away, and I ended up by selling the house.
Okay.
I ended up by paying an awful lot of money in capital gains, but instead selling the house, I did put the money in the irrevocable trust checking account. And then when I purchased another home, I purchased the condo. I purchased it with the funds that were in the irrevocable trust account.
Yep.
Now that was done. I just did that like almost a year ago now.
Better hurry, though. Get to the question.
Okay. The trust was done 11 years ago. Should I be looking at having that looked at again?
Okay, so a couple of things here. One, you certainly can have it looked at again. It doesn't mean that the trust is bad just because it's 11 years old. So that's the good news, first and foremost. But you're certainly welcome to have it looked at to see if you think there's a change. I'm a little concerned, and you probably didn't ask this, but quite frankly, I don't know why you paid a lot of capital gains taxes, because if it was sold after your husband died and it was in a properly drafted trust, you should have got a half step up in basis at a bare minimum. It's your primary residence. You should get a $250,000 exclusion on top of that if it's drafted. I'm a little concerned about why you paid so much taxes when you did it, because this guide will explain to you that you don't have to pay those kinds of taxes if the trust is drafted right. But please go ahead and get a second opinion, look at it, see if it's okay. And your 5-year clock should be already all set, and the new property should be protected as well. Sorry to squeeze all that in so quickly.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. Elder life planning can be overwhelming, so make sure you're prepared, or you could make costly mistakes that affect your overall plan. Irrevocable trusts are the most common type of trust that folks use for financial protection. And while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit your family by calling 866-848-5699 right now. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Still more to come as we head towards the second hour of the Financial Exchange, including a little bit of a discussion about home ownership and home prices. We'll also talk a little bit about both the Harris and Trump campaigns and their approaches to potential tariffs in their administrations, and then a little bit of electric vehicle talk in terms of more delays that different companies are putting on in terms of their plans to build more electric vehicles. All that and more coming up in Hour 2 of the Financial Exchange. Stick around.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to STOP.
This message furnished by the National Association of Broadcasters.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
If you're getting close to retirement, you've likely thought about how you'll spend all of your free time. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and with no more 40-hour work weeks or hour-long commutes on your agenda, you might find yourself on the links in Florida or traveling the world with your spouse and family. The financial pieces of the retirement puzzle are important. Having a specific plan about how you want to live day-to-day in your post-professional life is just as important, and our new guide called A Day in the Life of a Retiree may help. You can get it today by calling 800-393-4001. In the guide, we're going to discuss how to connect your financial needs in retirement to where and how you'll be living. Call us again at 800-393-4001 and get your free copy today. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker here, kicking off the second hour of the Financial Exchange, and markets are, I'll say, mostly down because the Dow is up 30 points, but the Dow is not a real index, or at least it shouldn't be, because, well, it has 30 companies in it, so it's pretty narrow, and then it's price weighted, so however much your shares are worth rather than how much your company is worth determines the weighting, so it's just, quite honestly, kind of a jokey index that for some reason gets quoted more than every other one. The S&P 500, though, is down 22 points, and the NASDAQ is down 191, a little over 1%, so tech struggling to start the day here. The 10-year U.S. Treasury is down 0.4 of a basis point. You heard that right. It's at 3.829%, so barely moving. Oil, West Texas Intermediate, is down 43 cents a barrel at 75.10. Sticking with oil and gas prices, the AAA national average for gas moving back up today by 1.1 cents to 336 and 1/10 of a cent. First upward move we've seen there in a couple weeks now after prices fell into the mid 330s. And we've got gold off $11.10 an ounce at $25.41 and 80 cents an ounce. Paul, anything else catching your eye as we eagerly await Nvidia's earnings after the close today?
No, Nvidia is what it's all about today.
Okay. Well, yesterday, you know what it was all about? Home prices. We got a couple different sets of home price data. One from Case-Shiller, another one from the FHFA. And both of them showing that the pace of home price increase is slowing year over year, but still in the mid-single digits at this point. And even though there are some markets in the country that are seeing falling prices, it is very much still a local phenomenon, not a national one.
It really is. I mean, you had provided us with some context off air ahead of the show where basically you had provided this chart. It was done by Atlas Research, I believe, that only 8 states in the country have increased inventory from 2019 pre-pandemic levels. The remaining 42 have lesser supply. And if you look at the New England area where most of our listeners are, it is just anemic in terms of the amount of available inventory out there over a 5-year period. The drops in the New England states are dramatic, and I'm sure that you have those numbers to lay it out. But really, it is a story of different areas of the country. It's the southeast area that makes up the majority of those 8 states that I was referencing before where inventory is increased. But if you look across the rest of the country, inventory is still extremely low. We sit on the interest rate side of things. One of the things that was the case when a lot of this data was sourced, the price increases that Chuck was speaking of, that was based on mortgage rates sitting at about 7%. They now are in or around 6.5% or so. Clearly that's not enough to get a significant amount of buyers back into the market. We'll see where it goes. Perhaps with rate cuts towards the end of the year here, we can see a trickle-down effect to the 30-year fixed mortgage. But the inventory story, that ain't changing anytime soon, that's for sure.
With this, there's a piece from the Wall Street Journal. It's titled, "The American Dream Feels Out of Reach for Most." And the Wall Street Journal did a survey of 1,502 U.S. adults in July, and they asked them a couple different things. The first is they said, look, what do you consider important to the American dream? And the second piece is, what do you consider to be, easy to attain? And there were 6 different items that they listed, and I'll just kind of go through each of them. The first was financial security. Almost 90% reported this being important to the American dream, but fewer than 10% reported that it was easy to attain. Another one, kind of in the same boat, comfortable retirement. Very similar numbers, about 90% saying it's important, 10% saying, yep, it's easy for us to get there. Home ownership was somewhere, 89%, I think, said that owning a home was essential to the American dream. Only 10% said it was easy for them to attain. Again, kind of similar things. Annual vacation. Almost 80% said, yes, this is something that's important to the American dream. About 15% said, yeah, this is easy for us to get. Children. About 65% said that that's important to the American dream. 40% said, yep, this is easy for us to, attain. So closer alignment there. And marriage, about 60% said, yes, this is something that is important for the American dream. And
2% said it was easy.
45% said that it was easy, actually. Well, at least easy to get there. So I think when you look at this on the big financial things, there's a clear disconnect between, hey, is this, part of the American dream, with most people saying, yes, it is, and the vast majority of people saying, I don't think it's easy to get there. What do you make of this, Paul?
They're not wrong in terms of, now, I'll be interested in your feedback on this. The affordability of U.S. homes is at a low that I believe dates back to 1986. You had made an argument previously that, hey, back in that era of time, it was not that affordable to do. So perhaps this argument that we're making today that things are so bad from an affordability standpoint, maybe it doesn't measure up when you go back further to the 80s there. I do think all factors combined, it is a very challenging environment. And they reference here the differences in generations where the home prices relative to the interest rate environment in past generations made it a little bit more affordable than it is for those doing it now. Each generation has its own unique challenge to confront. I'm not going to argue with someone that buying a home today is challenging because of the inventory issues that are really dramatic. That's what I'll say that on that front. I certainly sympathize with the inventory issues, which date back to post-2008 recession concerns.
So I think that when we look at the data that we have out there, I think it's inconclusive whether any of this is getting better or worse. Because, every generation faces its own challenges in trying to become financially independent. Like, you can go back through pretty much, again, any generation and say, okay, this is something that was really tough that they had to go through financially. I'm not even getting into like generations that had to be shipped off to war in the 1940s and things like that. But you talk about that post-war period, and In the late 40s, early 50s, inflation was really high. There were 2 different recessions immediately after World War II. It's hard to say that you would have felt comfortable being like, hey, everything's going to be fine financially here. But the 50s and 60s turned into pretty good decades overall to kind of build your wealth in. If you're starting, in the 60s, great, you get off to a nice start, and then you get hit with a decade of inflation and high interest rates, which makes it really hard to, be able to afford a lot of necessities and buying a home like that. That was not exactly easy. The 80s, you can say, okay, things got a little bit better, and then, in the 90s, you had a recession early in the 90s that was really tough, and then it was bookended by another recession in early 2000. Then you had the financial crisis in 2007, 2009, another good 10-year period, and then you got hit with, the pandemic and high inflation. And so every generation faces different challenges here. When we look at, is the American dream easier or harder to attain today than before? I don't think there's anything conclusive, because I also think that it's probably changed an awful lot as the world has changed too. You look at a couple of these things. Just one of them that stands out to me, hey, this idea of, an annual vacation. And a couple things that I find notable on this. The first is, look, if you're trying to go anywhere, there are just more people trying to go to the same places than before. So it is absolutely going to be harder to do those things. Talk to anyone that, has a family vacation place that they've gone to for decades, and they'll say it's more crowded and all the places around that are rentals have gotten really expensive because, hey, the population of the U.S. has doubled in the last, 30 years, but there's still only one Lake Winnipesaukee, and so, okay, there's more people just wanting to go there. It's the same reason that our roads have more traffic on them, is there twice as many people as there used to be. So, yeah, some of these things have gotten harder to do. Others, the burden's been shifted as well. Comfortable retirement, the burden's gone from companies to provide that to individuals providing it for themselves. The risk has just been transformed and transferred onto individuals rather than leaving the system entirely. On the other hand, you also do have opportunities available to you now that you didn't have before. Hey, maybe, you want to own a home in place X, Y, or Z. It's not really feasible because the job market there isn't good, but now you can work remotely from there, and so maybe you can work in a place that's normally more retirement-oriented than you used to be able to. So I don't know that things are inherently better or worse. They just kind of are, and I think trying to compare across generations for something as, as varied as whatever the American dream may be, I don't know. I mean, it's hard to do. And as someone like, they interview someone here and they say, it's a person who says, hey, once you do X, Y, and Z, you'd get a good job and enjoy the rest of your life in a house with a front gate. Yeah, there are things that, certainly you don't want any American to grow up with, living in an area that, has high levels of violence and crime and things along those lines. But when you talk about this idealized vision of, hey, what it could be, most Americans have never been able to attain that, no matter what the time period is. I mean, the home ownership rate, just as an example, for when we have, reliable data, has basically been in the low to mid-60s ever since the 1960s. It's not something where you can ever point to all Americans being like, yes, I could own a home. There's always been 30 to 40% that have not been able to. So does that mean it's harder today than before? Maybe. I don't really know. It's tough to tell is what I'm getting at. And I don't think we do ourselves favors by trying to look back at the past, because we also really don't remember the bad stuff about the past.
Sure.
We kind of brush that aside and just get all nostalgic for, the good old days. And sometimes the good old days weren't quite that good. We just forget about the bad stuff. Let's take a quick break here. When we come back, we got some trivia, and then we're talking tariffs after that.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so make sure you're prepared, or you could make costly mistakes that affect your overall plan. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit your family by calling 866-848-5699 right now. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in pure cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited, dine-in only. Another day here of trivia with 80s theme trivia that we've been doing in the month of August. In 1982, an undeclared war broke out between Great Britain and Argentina over a group of islands off the coast of the South American country. The conflict lasted 74 days and cost over 900 lives. Trivia question today. Which island chain did Great Britain and Argentina fight over back in 1982? Once again, which island chain did Great Britain and Argentina fight over in 1982? Be the third person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the third correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, a lot of chatter coming out of both presidential campaigns about the ideas they have regarding tariffs. What is the state of play right now, and what do we think it means for the U.S. economy?
So both parties are in favor of tariffs. It's just the implementation of them that they differ on a little bit. There is a unanimous approval for continuing to assess Chinese tariffs on their exports. As to the percentage that should be assessed, that's where there's a little bit of difference there. President Trump has campaigned on the idea of a 60% tariff on Chinese exports while proposing a more general global tariff to all imports to the U.S. of between 10 and 20%, where you have on the other side of things, Kamala Harris has not really gotten into the specific as to how much the tariffs would be, and shying away perhaps from this idea of global tariffs, but still in favor of tariffs. President Biden had continued on with the tariffs that President Trump had put into effect in 2018 and assessed some more on some Chinese goods on EV batteries, semiconductor, steel, and medical products. And if we look at this from a broader perspective, Chuck, to me, the idea of global tariffs is extremely concerning for a country that is coming off a period of time where inflation was the end-all be-all in terms of our economic concerns that we discussed on the show on a daily basis. What these tariffs will likely lead to, in my opinion, and some other economists as well, is retaliatory practices from other countries out there, and in effect it's usually the end consumer that is going to be the one that bears the burden of these types of tariffs. So from a policy standpoint, while it sounds nice to say that you're going to tariff an enemy or certainly a country of concern like China, it's not always the best in practice from an economic standpoint.
No, and look, there are certainly places where it can make sense. And I still remember back in the early days of the Trump administration back in 2017, I was someone who, when we were talking about tariffs, I was like, no, like this is not the direction that you want to go in. And I came around because I saw with China, especially in certain areas, I said, okay, it can make sense to use these strategically to achieve, objectives A, B, and C, and there can be a place for them. But the idea of blanket tariffs, simply saying, hey, I want to put tariffs in on, all imported goods at rate X because we want to make stuff here. I don't know that we necessarily want to make everything here, because the reason why globalization happened is because it's cheaper in a lot of cases to make other things elsewhere. And there are things that are not mission critical to the United States that it's more important to have low prices on. And B, it's unclear where you're going to get the workers to actually make these things as well. I use the line all the time, look, I don't care where the Tickle Me Elmos are manufactured, because ultimately it doesn't matter. You can make them cheaply, and are you going to find American workers that want to work on a Tickle Me Elmo assembly line? I don't know that you are. On the other hand, when you talk about semiconductor production, steel, medical devices, drugs, things along those lines, yes, those are mission critical things that you need to have production capacity for domestically. And if one of the ways to achieve that is through the strategic use of tariffs in those areas to prevent a bad actor from flooding the market with those things to keep your own production down, then yes, I think tariffs can absolutely make sense, even if it's nothing more than a negotiating tactic to still ultimately try to just get the other country to play along by the rules that you want to play by. But can we use them strategically, not just as a blanket tool to try to bring all manufacturing back to the U.S., which I'm not sure would necessarily be a good thing.
Yeah, my frustration was the idea that it was mentioned that this would create higher paying jobs, and those types of jobs, like you were just mentioning on the manufacturing side, aren't the sexiest positions and aren't oftentimes high paying. So I just question that being the result from tariff activity.
And also, if they're higher paying jobs, then they're going to be higher costing items.
Exactly.
Quick break here. When we return, we've got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled A Day in the Life of a Retiree. The big focus of this guide is about figuring out what you actually want to do with your time in retirement, not just the financial piece, but how are you going to spend your days? How does someone go about figuring that out, Mike, or starting to figure it out?
Yeah, Chuck, I love this piece because it is a lot different than our normal course of what we put together from the Armstrong Advisory Group. And what I tell people frequently, one, I'm not going to tell you how to spend your retirement. I have no idea. But the most successful retirees, and by successful, I mean the most content in retirement, who are not stressed about money, are those who have really thought through a coherent plan of not just what I don't want to do in retirement, i.e. work, but what I want to accomplish and do when I'm done working.
It seems to me that it really has to be something where you say, I'm retiring to do this, not retiring from doing that more than anything else.
And often that's the focus because, look, for a lot of us, work is extremely stressful. We've been supporting families for decades, and the allure of not having to do that, not having to pull in that paycheck anymore is really tempting. But I'm here to say that I've looked at a lot of this from a lot of different people in all sorts of different industries, and the most successful ones are the ones that are retiring because they're passionate about something that they want to do that they finally have time for.
Our guide is titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001. Again, the guide is A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia question today was, which island chain did Great Britain and Argentina fight over in 1982? Well, that would be the Falkland Islands. They lay just 300 miles from Argentina, but have been under control of Great Britain, which is 8,000 miles away, since 1833. In 1982, Argentina's president tried to retake the islands by force. The ensuing 74-day conflict cost more than 900 lives. Great Britain still maintains control of the Falklands. Winner today of the Financial Exchange Show t-shirt was Bill from Stoneham, Mass. And Bill's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine-in only.
General Motors delaying a battery factory in Indiana, pushing back their output start to 2027, about a year later than initially planned. This joins announcements from a number of other automakers that are pushing back their plans for battery plants and EV developments in the United States.
Yeah, you saw similar messaging from Ford in terms of their plans for the EV factories out there, and now you see it from GM as well, where initially they had a target of producing 1 million EVs in 2025. That goal has been abandoned, and as Chuck mentioned here, this factory in Indiana, which was going to be costing about $3.5 billion, was pushed back to 2027. In general, GM has sold about 38,000 electric vehicles in the first half of 2024, and they're making about 200,000 this year. It really is going across the whole auto industry. Like you said, Chuck, it seems that a lot of these companies are scaling back significantly their plans just because of tepid EV demand domestically in the U.S. And then, as the CEO of GM referenced, just sort of waiting for the infrastructure to continue to be built out a little bit on the EV side of things here.
Yeah, not surprising. This is something where you're still seeing growth, but not what these companies were expecting in these markets. And the other piece is, look, a lot of these plans were announced back in like 2020 and 2021 when automakers looked at what was going on with Tesla and all these SPACs for EVs and said, this is an easy way for us to juice the stocks a little bit. And now that the market has kind of come back on a lot of those companies, it's, hey, we don't want to do these huge capital expenditures without knowing that we're going to be able to sell these things. Let's not do this anymore and slow the brakes, slow things down a little bit at this point. Folks, the Armstrong Advisory Group is hosting 2 seminars this fall. The first is on September 26th at the Cape Codder Hotel with special guest Ed Lambert, host of the WXTK Morning Show. The second one is at the MGM Springfield on Tuesday, October 8th. So you can join us for a live broadcast of the Financial Exchange, followed by an educational lunch with the Armstrong Advisory Group. We're going to be discussing the upcoming presidential election, economic policies from both candidates, what effect those policies might have on the current economic landscape, and how it might influence your ability to manage your portfolio strategy in today's financial environment. You can sign up for the event nearest you by visiting armstrongadvisory.com/events. Just fill out the form associated with the event that you'd like to attend. That address again is armstrongadvisory.com/events.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, we've got 4 choices for the next topic here.
Mm-hmm.
We can talk about Social Security, credit scores without debt, Dollar Tree fees, or accounting.
Let's talk Social Security.
We're going to talk accounting. And the reason why is because the title of this piece is titled Accounting Isn't Cool Anymore, and it's specifically about how no one's choosing accounting.
And you're going to say it was never cool.
Well, accounting isn't cool. Like, let's be honest. Accounting, it's one of the most thankless jobs that every single company needs. It is really tedious to learn. It has really high penalties if you do your job incorrectly, and yet is absolutely critical to the actual functioning of our economy, because without good accounting, you don't have trust in actual companies to do what they say they're doing. And Matt Levine, who I think is one of the best finance writers out there, talks a lot about this and says, look, you know, what gives? Why does no one in finance want to get into accounting? And like, there's always a joke that everyone in finance wants different roles. Like, you know, the investment bankers want to go work for private equity, and the private equity guys want to own insurance companies, and the insurance companies want to be wealth managers, and no one wants to be an accountant. Like, that's kind of where it is. And Levine kind of explores, like, hey, why does no one want to be an accountant, and what can we do to get more accountants? Because the lack of accountants that we have is turning into a problem.
Sure. It's an area where it's a lot of work that goes into getting your CPA in terms of the credit hours and passing the licensing. I believe there's 3 different levels to that test as well. And then there's a master's that needs to be attained in addition to an undergraduate degree. But as much as there are criticisms of accounting, and often if you're hired by the Big Four too, you end up working a ton of hours, you can always find a job. Like you mentioned, it is mission critical to have these types of jobs out there, and the pay is pretty good once you can move your way up. But it is work that is just a haul and can be a real pain.
They interviewed a retired accountant in South Florida. Quote, "The pay is crappy, the hours are long, and the work is drudgery, and the drudgery is especially so in the early years."
That's very true. On the earliest front.
And so some of the things that different universities and companies are talking about is, hey, how do we incentivize people to do this? And he quotes here, "The way accounting is taught could also help to, stem the shortage. It's up to us academics to make the curriculum exciting and interesting. To me, that means relevant and timely. For example, this professor recently taught a class about the intersection of blockchain and accounting. The report suggestions included placing highly engaging instructors into these classes and incorporating gamification and other technology to stoke engagement and demonstrate the vital role technology plays in the accounting profession."
That's literally what I was going to say. Just gamify it.
Well, so it's really interesting when you think about this actually and say, okay, does that mean when I put a correct entry into QuickBooks that I get confetti like when I, buy a stock on Robinhood?
That would be cool.
Right? Or
fireworks?
Hey, you figured out, which loophole to use in order to reduce the tax burden of the company. Great, you get a gold star next to your profile. You get the...
There we go.
I mean, it sounds dumb, but it probably works. You got to do something just to make it a little bit more...
And then compete against your classmates and have a leaderboard and stuff.
Either of you watch The Social Network?
Yep. Paul, it's a pretty easy question. Okay.
They got the scene where they're just starting up, and Zuck decides that he's going to have a competition to see who's going to be the interns. And what they're doing is they basically go into this big auditorium, and the interns are writing code, competing against each other while drinking, and they have to do a shot when this happens and a shot when...
That's what I'm talking about.
you don't want to do a shots when you're doing accounting.
We'll see.
I'm just saying, but some kind of competition, like a fantasy accountant league or something like that, where, hey, like there's got to be something you can do on that side of things.
Fantasy accountant.
You know, Jimmy's my favorite accountant. He saved the company $1 billion last year by moving the headquarters to Ireland.
Yeah, he's a sleeper.
You know, you can get him in round 3. I don't know. There's got to be something that you can do to make it a little bit more exciting, because 25 years ago, didn't we look at coding for computers the same way? Like, oh, those nerds, it's so boring, and that's how everyone talked about it. And now everyone's going, how can I be the nerd? How can I do that? There has to be a similar transformation that we can make for accounting to make it cool. You know, like, oh, like, here's why I want to be an accountant. Because job security is a big thing, but it's not cool. And honestly, if you're going into accounting, probably have good job security because there's not a lot of competition there. But what's the cool thing that you can do with it? Someone's got to come up with that. Let's take a quick break here. When we come back, we will do Stack Roulette, and Paul can actually cover the story that he wanted to cover this segment.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
Cardiovascular disease is the #1 killer of women, taking the lives of 1 in 3. That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better, stronger,
more powerful.
We have each other. When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th at Fort Independence on Castle Island, and registration is now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Paul, what do you have for me for Stack Roulette today?
Chuck, the Kelsey brothers signed a deal with Amazon for their New Heights podcast that's worth more than $100 million. And I'm surprised by the dollar amount that they were able to command here. I don't doubt the popularity of the podcast, as it's ranked fourth on, according to Edison Research, on the podcast charts. And it's more so the question, Wondery, which is the affiliate of Amazon that is going to be in charge of distributing this podcast. They don't have the exclusivity on it, so you could still listen to the podcast on Apple and Spotify and other networks. They're really only getting access for the ability to sell ads on the podcast and be able to distribute it. And I just wonder, from a price tag perspective, to get $100 million for something that it's not necessarily going to drive people to sign up for your platform, because the only benefit that you get for signing up for Wondery is you get to listen to the podcast a couple hours earlier with no ads. I just don't know if that is really worth $100 million, but that is just my 2 cents on the matter. And if Travis Kelce ever breaks up with Taylor Swift, I can't imagine they will command the same kind of numbers and audience at that point.
I don't understand how the economics of podcasts work very well. I mean, obviously, I get that like they sell ads and stuff like that, but
right.
the number of eyeballs that you need to have in order to justify these kinds of numbers, they've got to be astronomical, and clearly they have them because Amazon's not dumb.
Right.
Like, Amazon can be a lot of things, but they generally aren't dumb, especially on this kind of stuff. And so I'm kind of trying to figure out, okay, like what, how do they think they are going to drive that incremental growth as a result of this? So they must have something that they know and that they have figured out on it. And look, Amazon has a huge advertising market that they command at this point. They've got a huge ad unit that sells ads across all their platforms. And I guess the big thing is they're probably going to be the ones placing, the ads on the podcast, and they think they can do so with their inventory because of how many people want to advertise on Amazon's different networks. So now Amazon can, let's say that you are company X selling widgets. Amazon comes to you and says, hey, here's, the ad package that we put together. It's, okay, well, we got ads on the Amazon site for your product whenever search topics X, Y, and Z are put in. You got ads on Thursday Night Football. You got ads on, the Kelsey Brothers podcast. It's a pretty nice suite of stuff that you can toss out there now. And, oh, by the way, here's all of the other Amazon Prime programming that we have, and you can advertise on all that stuff too. Whatever the hit show is that they have. Now, I don't even know what's big from them now, but I'm sure they have something. But hey, it's a nice little package that their advertising people can put out there and say, yeah, you can reach your, buyers on any of these platforms. I think that's probably the most attractive piece, is being able to bundle it all together then.
That's a fair counterpoint that from the ad perspective, there's no better one out there maybe than Google in terms of reaching a target audience and the data that they likely have of what they're able to deliver to people who they're looking to sell attitudes. That totally get. I was certainly thinking of it more from the membership subscription aspect of things, and perhaps that's not as significant, and it's not to Amazon. I mean, Spotify, it's their whole business is to get listeners on the platform, and so you've seen them do these big deals but get a period of exclusivity, and that makes sense. Okay, if someone loves the podcast, they're going to have to get Spotify in order to get on the platform. You get them sticky on your platform, and then you let the podcast walk after a couple years. This is a fair point to make. It's a different look on it, more focused on the ad side of things, but certainly they're set up pretty well post-football. Obviously, Jason retired, but Travis is likely to follow suit in the next year or two, you'd think.
I want to stick with football here with the NFL voting yesterday to allow for private equity firms to take minority stakes of up to 10% in the common equity of individual teams. And the only place that I land on this is that we've reached the point now where I don't know how much more price appreciation there can be in NFL teams just because there are so few people that can afford to buy them. And so the way that you allow for owners to cash out some of what is otherwise a hugely illiquid asset is by allowing private equity firms that can raise billions of dollars to end up taking these minority stakes in NFL teams. Because, you got NFL teams now that are being, just locally, look, not the NFL, but the Celtics are being talked about as potentially receiving, $6 billion as a price for their sale. You got NFL teams that are going to be chasing that $10 billion mark soon. How many people out there, even how many consortiums can you put together of, 5 or 6 or 10 investors that can buy teams at those prices without having something like private equity in here? I think that's what this is really doing, is providing some liquidity to owners that need it. And is it going to be, the death of the NFL? Probably not, because quite honestly, nothing is the death of the NFL. I feel like every year it's like, the NFL is going to lose viewership because of this. And it doesn't.
Those talks seem to have subsided quite a bit, but they were really prevalent with all the concussion issues and many other scandals that they battled, but it didn't slow them down at all, and I don't think I see anything in its path. And if you look at just live rights, and we've talked about maybe there being a bubble there, it's hard to argue on the NFL side of things. The NBA viewership is kind of a little wishy-washy, not really growing at a solid clip, but the NFL still puts up huge numbers. And I was looking at the most valuable franchises in sports over the weekend. We were just talking about it, and I thought the Celtics would rank higher, but I forgot how valuable NFL franchises are over NBA. The Los Angeles Rams were 2 or 3 on this Wikipedia list, and it's a lot of football teams that are in that top 10, and they just have a larger reach domestically, at least, than some of the basketball teams.
And by the way, every other major U.S. league allows for private equity investment already. Right. So, look, maybe they ruined baseball by baseball, taking on private equity in 2019. Counterpoint, I think the baseball product's actually better than it's been the last 10 years with things like the pitch clock and everything, making it flow a little better than it used to. So, who knows, Private equity, maybe not all bad. Is that the slogan? I don't know. Let's take a quick break here for the rest of the day. Nvidia earnings after the bell today. We'll recap that and a whole lot more tomorrow on the Financial Exchange.